Hey everyone, let's dive into what's causing Bitcoin and altcoins to tank right now. And more importantly, what you can actually do about it. The crypto market is in full panic mode, and if you're feeling anxious, you're definitely not alone. So, what's really behind this sudden sharp sell-off? Let's break it down together. The big story is unfolding in the Middle East. Israel launched airstrikes on Iran, and that single move sent shockwaves through global financial markets. This isn't just a regional issue. It's a geopolitical event with worldwide consequences, and the ripple effects are being felt everywhere, especially in riskier assets like crypto. Here's why it matters for crypto. Oil prices spiked almost instantly, and when oil jumps, it usually means higher energy costs for everyone. That impacts everything from mining costs to inflation expectations, and it makes investors nervous about the future. That spooked investors across the board. Stocks dropped hard, and as we've seen again and again, Bitcoin and altcoins got dragged down right alongside them. When traditional markets get hit, crypto rarely escapes unscathed. This isn't a blockchain bug or some new technical flaw, it's just a classic risk-off move. When the world gets nervous, people sell what's risky and pile into safe havens like gold, cash, or government bonds. Crypto, for all its promise, is still seen as a high-risk asset. Let's get technical for a second and look at what the charts are telling us. Bitcoin just broke below a key support zone and is hovering near $101K to $102K. That's a psychological level for a lot of traders, and breaking it has triggered even more selling. If it slips below $101K, the next major support is way down at $96K to $98K. That's a big gap, and it means we could see some serious volatility if buyers don't step in soon. And the charts? Not looking great, to be honest. Momentum is fading and sellers are clearly in control right now. The 3-day MACD is about to make a bearish crossover. That's the kind of signal that's led to multi-week corrections before. If you're a technical trader, this is a red flag you can't ignore. On the weekly chart, the RSI is showing weakness, even though prices were just at new highs. This divergence is a warning sign that the rally might be running out of steam. We're not in a full-blown bear market, at least not yet, but I'd call the mood cautious at best. Most traders are sitting on the sidelines, waiting to see if this is just a shakeout or the start of something bigger. There's a shot at a short-term bounce, maybe even a quick relief rally, especially if RSI gets oversold. Sometimes these sharp drops set up for a fast rebound, but don't count on it unless we see real buying volume. But unless Bitcoin reclaims $107K to $110K fast, it's hard to get bullish here. That's the level where confidence could return, but until then, caution is the name of the game. And the pain doesn't stop with Bitcoin. Altcoins are feeling it too, and in many cases, they're dropping even harder. Ethereum couldn't break through $2.8 thousand. Now it's drifting toward the $2.4 thousand support. ETH has been underperforming lately, and if it loses $2.4 thousand, things could get ugly fast. If that level breaks, $2.1 thousand is next. That's a crucial zone for bulls to defend, or we could see even deeper losses. Solana was rejected at $167, now retesting $143 to $146. SOL has been a favorite for momentum traders, but right now, it's struggling to find support. Lose that, and we're talking $125. That's a big drop, and it could trigger more selling if it happens. XRP's stuck between $2.10 and $2.34, break below $2.10, and it could slide to $1.92 or $1.80. XRP holders need to watch these levels closely, as a breakdown could mean a much longer recovery. Chainlink is hanging on at $12.80, but if it fails, watch for $12.20 or even $11. These are the last lines of defense for Link bulls. The bottom line, altcoins are just following Bitcoin's lead, so keep your eyes on BTC. If Bitcoin stabilizes, the rest of the market might catch a break, but if it keeps falling, expect more pain across the board. So what can you do right now? Let's talk strategy for surviving this kind of volatility. First, don't panic. These market dumps can be brutal, but they often settle just as quickly. Emotional decisions are usually the most expensive ones, so take a breath and avoid knee-jerk reactions. If you're trading, manage your risk. Use stop losses, size your positions carefully, and don't over-leverage. Protect your capital so you can fight another day. Watch the $101K level on Bitcoin. That's the line in the sand. If it holds, we might see a bounce, but if it breaks, prepare for more downside. Negative funding rates hint at a possible short squeeze if things calm down. That means if too many people are betting against the market, a sudden reversal could catch them off guard and send prices spiking higher. But for now, be careful. Don't chase green candles and always use stop losses. Remember, it's better to miss a little upside than to get caught in a big downside move. If you found this update helpful, hit subscribe and give this video a like. It really helps the channel. And if you have questions or want more analysis, drop a comment below. Stay safe out there, keep your emotions in check, and I'll see you in the next one.